Bullish on Disney. Welcome, everybody. This is the DIS, is the ticker symbol for Disney. This is the stock analysis. My name is David Scheuer, and I'm your host of StockerFinance. Twitter.com/StockerFinance for more. The newsletter link is below if you want to go ahead and subscribe. It's just a monthly newsletter. So moving on, Disney is currently trading at $187.67 per share, down about 1.7 cents following its earnings report yesterday. It's actually recovered 118.27% since the coronavirus crash. It's still trading slightly below its 52-week high of $193.85, which it hit yesterday during earnings, a 52-week low of $79.07, which will remain significantly above a market cap of $340.48 billion, a dividend yield of just 0.94% there. On top of that, it's trading near its all-time high, which is very impressive for this company, which has seen just a surge in its share price, mainly due to Disney Plus and the rollout of just a much more innovative company than it has been in previous years. It also crushed earnings. Its earnings report were yesterday, as I said, this is their fiscal 2021 Q1 report. Expected analyst was 41 cents per share, a loss of 41 cents per share, that is, and Disney crushed that by nearly $1, coming in at a profit of 32 cents per share, which is very impressive for this company, especially during the times that we're in. On top of that, Disney Plus subscribers surged to 94.9 million subscribers, which is just incredible growth. I mean, it's truly impressive what Disney has been able to do with Disney Plus and their marketing, etc. On top of that, it actually beat their 4-year goal in just 14 months, so a little over a year. They beat their 4-year goal, and that's not even counting anyone who signed up for WandaVision. So that's really incredible that they've done that. On top of that, we see revenue and operating income continuing to recover. I say recover because parks and entertainment theaters are still recovering, still facing another California Disney park is closed. Florida is starting to reopen a little bit. We're seeing some partial openings there. Hopefully, those will begin to recover, but they said closures or restrictions will remain for at least 2 to 4 months moving forward. Operating income also sees a recovery there back to positive operating income. Net income barely breaks here at $17 million in net income. But again, the fact that they're able to have positive net income and be a profitable company this quarter is really impressive for the times that they're in. It really shows how much Disney Plus is going to pay off in the long run. We see their margins at 0.1%. Not surprised here, but the good news is that they're starting to recover and they're trending in the right direction. That's exactly what we want to see. Same with growth as well. Operating expenses down 12% over year. So as long as operating expenses are on the same level or relatively, I know revenue's down about 22%, so not as much as operating expenses are year over year, but still those are beginning to recover as well, which is a good sign as the entire economy recovers, as vaccines begin to roll out. It's looking good for Disney in terms of its parks, its theaters, its physical entertainment when you actually go there, etc., etc. However, Disney Plus has been surging and really just taking charge for Disney, which is awesome to see. Their cash position remains at $17 billion, pretty healthy cash position, a little less than Q4 and pretty significantly down from Q3. A lot of that, though, is investment into their different streaming services. On top of that, if we go ahead and look at their balance sheet here, I want to take a look at the bottom, which is their total Disney shareholders' equity. The reason I'm taking a look at this is if you look at the October 3rd from the previous quarter of 2020, it's at $83 billion. That increased to about $500 million to $84 billion in shareholder equity. That's really impressive that they're actually able to grow that. And why is that impressive? Well, that means that their assets are growing faster than their liabilities, which is a very healthy sign for this company, especially, again, in the position that they're in. This is a really difficult time for Disney, and the fact that they're able to eke out a profit and continue to just grow immensely with Disney Plus and that whole thing, as well as their other streaming services, is really impressive. And once parks begin to reopen, once theaters begin to reopen, etc., they'll be in a much better position in the future. Now, some bad news for Disney, though, is that their average monthly revenue paid per subscriber for Disney Plus actually decreased pretty significantly. This is from $5.50 per subscriber down to $4.03. And that's due to the launch of Disney Plus Hostar. Now, the average monthly revenue per paid subscriber, sorry, I'm mumbling my words a little bit, for ESPN Plus actually increased from $4.44 just to $4.48 due to an increase in retail pricing. The average monthly revenue per paid subscriber for the Hulu SVOD only service increased from $13.15 to $13.51 due to higher per subscriber advertising revenue as well. So those are all good signs. On top of that, we see the Hulu Live TV plus SVOD service increase increased from $59.47 all the way to $75.11 due to an increase in retail pricing, higher per subscriber advertising revenue, and an increase in per subscriber premium and feature add-on revenue. These increases were partially offset by a higher mix of subscribers to the bundled offer. Now, is this a negative thing? And obviously the rest of that was pretty good news that those prices are slightly increasing or increasing significantly. But Disney Plus, those the monthly revenue per paid subscriber, the fact that it decreased that much really worried a lot of investors. And I don't think it's a worry mainly for this reason. The fact that they're actually raising their prices, doing a $1 price hike pretty much across the United States and in many places around the world as well. So they're increasing it to $7.99 per month. If we add on that $1 price hike to the average per paid subscriber revenue, well, that's going to put it back to just over $5, and it wouldn't really take much tweaking for Disney to increase the average monthly revenue per paid subscriber to over what it was previously. So I'm really not too worried about that since they are doing this price hike, and I think investors that are worried about that should really realize that they're doing that low pricing to attract tons and tons of people to Disney Plus. If they had a super expensive Disney Plus where they were making a bunch of money from it, well, they wouldn't have nearly the amount of subscribers. It might start to die off, etc. They should get as many subscribers as they possibly can, even taking a loss, totally fine. And then, as a bunch of tech companies do, they go in and start charging, slowly increasing prices, keep increasing prices, because people are hooked on the content. They like the site. You don't want to cancel Disney Plus when you're in the middle of one of your favorite shows. No one wants to do that. And a couple dollars a month to people really doesn't seem like that much. So I think they can keep increasing it, maybe a $1 price hike every few months or so, 50 cents here, 25 cents increase there, and they'll be in a much better position, especially with the amount of subscribers they have that continue to surge and will only surge further on. Now let's talk about Star and Star Plus. This is the new part to Disney that they announced as well back during their Investors Day. So Star will launch in Europe and several other international markets on February 23rd, 2021, so this month, as a fully integrated part of Disney Plus, with its own branded tile, and a new collection of renowned general entertainment series, movies, documentaries, and more that will double down the content catalog available to Disney Plus subscribers. Disney Plus will be updated globally to offer enhanced parental controls, enabling the family-friendly experience parents expect, blah, 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 blah. We can keep moving on here. In Europe, the service will be priced at €8.99 per month or $89.90 per month, not dollars, euros, my bad. With a similar pricing adjustment in the other Star launch markets, including Australia, New Zealand, and Canada. The streaming service will continue its global rollout now with Star in the new markets, beginning with Singapore on February 23rd, 2021, followed by Eastern Europe, Hong Kong, Japan, and South Korea later in 2021. So really just a massive international rollout that'll really just boost their whole streaming service catalog even further. They're going to get more subscribers. It's going to keep adding to that just mega growth that they're experiencing right now. I think this is completely intentional timing of releasing this because people are still stuck in COVID. You don't want to release it after COVID is over. It's a perfect time. People are beginning to get bored or already super bored. I shouldn't say beginning to. Tons of people are still in quarantine, still really bored. Kids aren't in school still, et cetera, et cetera. So I think this is a great time and rollout for this. In Latin America, they're starting to take advantage of the region's portfolio of live sporting events. The company will launch Star Plus as a standalone streaming service. Star Plus brings together an unrivaled Star content collection, local original productions, and an array of live sports from ESPN, including top soccer leagues, Grand Slam tennis, and more. Star Plus will launch in June 2021 as a standalone service for $7.50 per month, or the local equivalent, as a part of an attractively priced bundle Disney Plus for $9 per month, or the local equivalent. I think that's excellent, although it will be releasing a little later in June 2021. I'm not sure why it's releasing slightly later than just regular Star launch. Perhaps it has something to do with the timing of sporting events. They've probably done an analysis of that. I'm not sure. In my opinion, I would try to release that slightly earlier if I was the CEO of Disney. Now let's talk about the new content as well. And they already released this at the Investor Day, so you may have already seen all the Star Wars content and Marvel content coming out. So I'm just going to briefly go over this. But just take a look at all the bold fonts here. There's so much content coming to Disney Plus. And what that says to me is, yes, they're spending a lot of money on this content, but they're going to be attracting tons of subscribers. The problem for Disney Plus at the beginning, for me, was I've really seen all those shows. I've seen all the Disney movies. Cool. It's not something like Netflix where I find a show that I love and I'm hooked on, and that's why I keep Netflix. That's one of the best things about Netflix is they have all these original content that's so good, especially a lot of the TV shows. You got Narcos, you got Maniac, you got Altered Carbon. I mean, you got, I could keep going on. There's a huge list of shows that Netflix has produced, and some of them are my favorite shows of all time. So if Netflix Disney Plus can do the exact same thing as Netflix and then slowly increase the pricing, they're going to just destroy destroy in the streaming wars here. So I think this is a very excellent decision for them to be releasing all this content, and not just a good decision, it's going to actually get people more hooked on Disney Plus. It's going to retain their subscribers, going to have lower churn, etc. It's just, they're in a really good position for Disney, and I'm really hyped for this company. And as an investor, I'm going to be completely honest here, I am invested in Disney. I'm very excited for this company, and I think their valuation, although it's very high right now, will be very justified in the future. Here's some more content that they're releasing. Anyways, thanks for watching. Please subscribe. Check out these videos as well. Hope you enjoyed this brief analysis of Disney Plus. It's looking really good for them going into the future. A million, there's, I think, over 1 million people a day now are receiving the vaccine. That's good news as well for Disney. Hopefully the parks can reopen, theaters can start to reopen, and they'll be in a much better financial position, especially as they start to raise prices for Disney Plus. Anyways, twitter.com/StockerFinance. Definitely follow me there. Subscribe to the newsletter below. You definitely want to check that out. And I'll see you guys in the next video. Peace out.